Ladies and gentlemen, thank you very much for joining us online for today's event. Because it's named Credit In, and today we are visiting United Kingdom of Great Britain and Northern Ireland, official name of the country, and our guest will correct me if I'm wrong. That's what I've learned in the school. And today, our guest and our guide on United Kingdom is one of the most known and one of the most dedicated promoter of credit management in the United Kingdom, in Europe, and I do believe on the globe, Mr. Philip King. Philip, welcome to Credit In.
Andre, thank you very much. It's a privilege and an honor to be joining you and to be here today.
Thank you. Ladies and gentlemen, if you wish to know the biography of Philip, I don't believe Philip needs any presentation from my side, but I always remember, to me, Philip remembered by two things. First of all, he received the greatest exit notice from the sales director, which I'm still jealous about, because when he was leaving the company, sales director said, "The best salesman I never had." So I always use that quote because I do believe, and we are common with Philip, that cooperation between credit and sales is really vital for the business. And second thing, which is most important, that's why I think, that's why I think Philip he already has his place in the history, because Institute of Credit Management of the UK, under the leadership of Philip, received the Royal Charter, and our profession became a separate, and we actually stopped to be the ugly child of accounting, and credit management became a separate profession, equal among equal. So, ladies and gentlemen, please welcome Mr. Philip King once again. Philip, today, as we agreed, we will be speaking about credit management in the United Kingdom. Despite my knowledge about that, I did ICM learning, or CICM to be correct, and but this was everything, let's say, rather theoretical. But at the same time, everybody knows that credit management is a subject or a job or a business done between people. So when we speak about doing business or doing credit management in the United Kingdom, may I just ask, what are the usual do's and don'ts about dealing with people in the United Kingdom? I understand that, like in Switzerland, there might be Welsh, there might be Scottish, there might be English, there might be some other places. But let's say, if we can just generalize a little bit, what are the particular, especially don'ts? What are the tips and trips of dealing with people in the United Kingdom?
Okay, so you're right. Across the United Kingdom, there's England, Wales, Northern Ireland, and Scotland, and each of those regions has its own nuances and ways of behaving. And similarly, within England, there are regions. So there's the northeast, there's the southwest, there's London and the southeast, and so on. And each of those regions has its own nuances, has its own dialect, has its own accents and ways of speaking, and so on. But fundamentally, across the United Kingdom, people are similar, just as they are across the world. We are talking about people. Are there any do's or don'ts? I'm not sure there are, really. What I would say, though, is that people from the United Kingdom generally have a reluctance in talking about money and a reticence in asking for money. And I think that's more noticeable in the UK than it is in some other parts of the world. And so that reticence means that very often in the UK, people who are owed money don't want to ask for it, don't want to talk about it, and tend to bury their head in the sand and hope that the money that's due to them will arrive. And sometimes that's a false hope, and it's a sort of not the best approach to take. But I think in general, people in the UK, Great Britain, don't like talking about money, so they like to make an assumption that money will be arriving when it should. They make an assumption that people will agree to pay them when they should, and sometimes that's a flawed assumption to make, and they aren't upfront enough in talking about what's due to them and what should be due to them, and money generally.
Yes, that's quite simple, because I see that in Europe, in general, it's quite common that, we signed the contract, we agreed on the terms, and we expect the money when it was written in the contract. If they don't come, normally people do it. And I noticed another, as you started to generalize a bit, I noticed another interesting thing is that, and we will come back to that in the end in the Q&A session. What I've found is that so many people in business are so reliant on the fact that, every debt could be collected. So like, okay, we do what we want, and then somebody will collect it, either our accountant, either our credit manager, or collector, or lawyer, or so on and so forth. And I mean, when this doesn't happen, they get extremely surprised. But I've learned one cultural thing, which is maybe it is common to, let's say, this wider Anglo-Saxon or English-speaking culture, is that normally people try to reduce the degree of formality as soon as possible. And when people start, after certain weeks of being in connection, or being in acquaintances, when people start to say, "Dear Mr. so on and so forth," people get surprised, because that's not. I believe this is because then it's an official language normally used by lawyers, and later on, in one of the famous British actress playing the role, being addressed like Lady Hamilton or something like this, said, "What did I do?" Is that normal? Because I was passing through the training in writing skills, and the trainer was really nearly laughing, saying like, "Okay, you addressed person officially first time because you didn't know. Then you conversated a little bit, and then people can continue to write that, 'Dear Mr. Johnson, dear Mr.'" I mean, and this is like, okay, I don't say this is an offense, but if we get to that, like, "Hi Jack," or "Hi Philip," so on and so forth, does that easifies the conversation? Is that really a tip which people can use?
I think we started this conversation saying that credit management was about people dealing with people,
Yeah.
and it clearly is, and that means building rapport with people. It
Yes.
means building relationships with people, and I think there are two elements to this. First, there's the timing element, in the sense that we've moved on from the days when it was always "dear sirs" or "dear madam," and now, even if you get a cold email from somebody, it will use your first name, and I think that's a generational thing. My children wouldn't use the same formal language that I used, and certainly my father and grandfather would have used. But it's also a sign of improving relationships, so that when you first start talking to somebody, it's Mr. King, or it's Mrs. whatever, and as you get closer, the relationship becomes less formal, and you get on first name terms, and I get surprised quite often when people in shops call me buddy, and they say, hey buddy. And I think, I've never met you before. I'm not sure I'm your buddy. I might be, and I might be in the future, but right today, I'm not sure I am. But that's become the normal sort of colloquial speech that people use. And certainly my sons do that, and I hear them do it, and I call them out and say, he's not your buddy. And they say, no, it's just the way we speak. So I think we've moved on from the formality. But in business terms, I think we still go through that sort of hierarchy you described, where we start with the formal language. And as the relationship builds, we become on first name terms, and it becomes less so. But I think it's an interesting insight, isn't it? That I guess because we've grew up in an era where formality was right, then we did that. And I was with a government minister yesterday having a chat, and I was introduced to him, and I called him, hello, minister, because that's the right way of speaking to him. But later in the conversation, he said, oh, just let's just use our names, and that was interesting. In the there was a comfort in the relationship that meant we didn't need to be quite so formal, and that opens the door to a more friendly, more transparent, more open conversation, I guess. So I think it's a good thing, but I think I guess I'm of an age where I still quite like the formal moving to the less formal, but we're seeing less of that. So, and I guess that helps, in terms of the way in which people perceive each other. Does that mean they'll pay you any better because you call them Andre rather than Mr. Sitchka? I'm not sure. I think it's it's interesting.
It's just famous Russian famous writer. I mean, Dostoevsky said that the manner are better taught not by mentor, by the heart. You always got a feeling, and you address person officially, let's say in the beginning when you don't know each other, but then when the initiative of the other party says like, okay, let's use our names, that's already permission. Or another technical tip, again, to reconfirm with you, when somebody is undersigning the letter and uses only the first name, that's enough. That's the way the person prefers to be addressed from the next conversation.
Yeah, I think that's true. Yes. But of course, we've moved beyond letters to email now, haven't we? So, email is very different.
To me, email and letter is the same, because I'm also old enough, you see my gray hair. And for me, I still use electronic mail as a matter of delivering letters.
Yeah. And I wouldn't, I think, if I was writing a proper letter and attaching it to an email, I would always use proper terminology, going back into the more old-fashioned approach.
Okay. So I believe we've covered cultural difference again. Thanks God, it's quite simple, and I really like, the attitude of people in United Kingdom. You make, since in international business normally works in English. I believe, people in UK and United States understand, and for somebody, English is second, third, fourth, and some, and father language. So all the mistakes are just, skipped. And by the way, I've learned in the gentleman code that gentleman never corrects in voice the language mistakes of other person.
Yeah, that's true. I think also the point I think is that in relationship building and in working with people, you try to reciprocate what they do. So if someone wrote to me and signed it off as Mr. Smith, I would respond to them as Mr. Smith, because
Yes.
that seems to be the level of comfort they have. Whereas if they signed it off John, it would be uncomfortable to reply to Mr. Smith in that sense. So I think there's a,
Yeah.
in the same way as we try to match ourselves to people we're dealing with, I think you try and keep within and I deal with some people who are very formal in the way they speak and the way they behave. And when I deal with them, I behave more formally because that's what they're comfortable with.
Yeah, it is really quite simple. Philip, as you mentioned, a minister, and I do believe you are following the economic situation in the UK. May you please highlight if you have any particular development trends in the UK economy? What are those which are really affecting the credit management in the country, especially taking into account you undergo that two major events, if not call them hurricanes. We speak about Brexit and we speak about COVID. So, and now we've got like we got already, depending how we count, we've got a couple of years after the COVID. And so how do you see the UK economy now?
Okay, so let's take COVID first. So there was a huge amount of borrowing driven by government during COVID in order to help businesses stay afloat through the pandemic. A lot of those loans have been written off. There was quite a lot of fraud involved by businesses that took loans who weren't entitled to them and so on. But for the most part, those loans are now being repaid or have been repaid. And that's putting pressure on businesses because they've got, repayments that they wouldn't have had before COVID. But I think we're seeing that gradually work its way through the system. And the government's now got a recovery loan scheme system in place, which again gives easier access to funding for businesses. And that's working through. Businesses generally suffer from inflation. UK in March, it was 3.2%, which was down from 3.4% in February, so it's going the right way, and was down from 10% last March. So we've seen a big drop in inflation. We haven't yet seen the government's target of 2% hit, but analysts believe that is coming. And inflation has a huge impact on businesses generally. Their prices increase, their costs increase, the cost of energy increases, cost of fuel increases, all of these things that contribute to the amount of money they can generate within the business. And therefore they have to increase their prices, and that has an impact on demand and on the economy generally. So I think inflation coming down is a big one, and we'll see where that leads us. The other big number is bank interest rate, and the base rate is currently 5.25%. It has been since August 23, following 14 consecutive rises, going from sort of 0 up to 14, up to 5.25. There was a lot of expectation that interest rates would drop maybe next month or June. That's dampening now. Now people are saying it might be a bit later in the year. But that has a big impact on business. Businesses that have got loans on variable rates are paying more now than they were before. So they're having to finance that and find the cash flow to make increased payments. And that's a big issue. So if I'm a small business and I've got a COVID loan that I'm still repaying, and I'm seeing inflation mean my costs are going up, and I'm having to increase my prices to my customers, and raising finance is more expensive because the bank rate is higher. And if I've got a mortgage and I'm a micro trader or a sole trader where my trading is through my personal account, then that's impacting on my income. So there's a lot of pressures on business in terms of how they keep the business ticking over, how they keep the cash flowing through it. And I think that's a big one. And there's a measure called the PMI, which is Standard and Poor's and the Chartered Institute of Procurement and Supply, that issues an index every month. That's now positive. It's 54. The latest flash forecast was 54 this week, which is the highest since May last year. So that's going well. But it's services is positive, manufacturing is negative. So it's just about holding its own, but it's not surging ahead. So the economy is largely stagnant. Inflation is still higher than it wants to be. Prices are still going up more than we want them to be. Bank rate is still higher than we want it to be. So all of those things are causing pain for business. And we have in the UK a general election coming this year. And it could be as early as the summer, it could be in the autumn, October-ish, which is deemed to be most likely. But that has an impact because it means there's a lack of stability. Businesses' confidence in where we're going economically and what our plans will be is diminishing because of the changing government. And, all the signs are that we will see Labour come to power and the Conservatives lose power. But whether or not that happens, change of government always brings with it uncertainty and change, and means that businesses are feeling slightly less stable and more vulnerable than they would in a normal cycle of events.
Thank you, Philip. You mentioned PMI index. Can you please elaborate a bit, because that's not something I'm familiar. I'm not sure our audience is familiar with that index.
So the PMI has been around for many years. They do a monthly measure by surveying businesses on how
So PMI stands for
Purchasing Managers Index.
Okay. Yeah.
So it's based on buyers and organizations buying.
Now clear.
That's the fundamental principle. They measure and they produce an index based on how feelings are moving. Anything above 50 is deemed to be positive and growing. Anything below 50 is negative and declining.
So it is just a little bit above 55.
Just a little bit above. 18 months ago it was below, so it's going the right way. But as I said, services there are a couple of indices. There's a services index and a manufacturing index. Manufacturing is below 50 and services is above 50. So manufacturing is still declining and services is increasing. And I guess as a fundamental principle, you really want manufacturing to be growing, because that's the sort of the core activity, and services are less tangible. I
mean, to me, manufacturing is bigger multiplier for the economy.
Yeah, sure.
And maybe in terms of jobs.
Yes.
Maybe in terms of jobs, they could be equal, because services need people, manufacturing need people, but services create less, let's say, other subsequent jobs and, servicing industries and so on and so forth.
And every time someone makes something, they've got to buy something else to put into it to make it.
Yes.
So, and then someone's got to manufacture. So there's a whole process there and a supply chain that feeds the economy. Whereas if you're an accountant in the services sector, then you do a service and that generates revenue and income and so on, but it doesn't have that same knock-on effect as manufacturing does.
Yes. And as you mentioned, the interest rates, I always find that there are two components in terms of liquidity. First of all, obviously, we need to take into account interest rates, but in many parts of the world, I just noticed that companies can manage to run business with quite high interest rates. It could be shown on the calculations, but at the same time, access to financing is restricted. So just to give you an example, companies are coming for loans and asking, let's say, for the million. Obviously, in reality, they might need 800,000, but they receive in the end 200,000, which is not enough for growth. So if you can, maybe if you have an idea how this is in the UK, what is about access to finance for, let's say, especially for your favorite and small businesses, which I think in UK their part in the economy is something close to 50-60%, which is actually the backbone of the economy. And how is the situation with access to finance in the UK?
So you're right that the inflation and interest rates have a big impact on access to finance. The banks are less willing to lend if they're not confident in the businesses they're lending to. And if those businesses are facing increased costs and inflation and everything else, then that knocks the confidence of the bank, and the bank is less likely to lend. So you get the position that you just outlined, where someone, wants 800,000 and gets 200,000, which doesn't do enough for the business. And I think that the big banks are still nervous about lending, and they're not as free with lending as there were. There are many challenger banks now. There are lots of alternative ways of raising finance, and those are dynamic and are growing. But one of the challenges is that small businesses aren't aware they exist. And so small businesses, a lot that I talk to, will go to the bank for an overdraft or a loan, or they'll use their credit card, or they might borrow money from friends and family, but they don't understand some of the other finance options that are available. And so they miss out on finance that might well be available that they don't use. And that lack of finance means that businesses can't grow. They can't invest in people or in machinery or in more premises or anything. And that has a knock-on effect on the economy generally, and on the growth of those individual businesses. So all of these things are really intertwined, aren't they? You can't separate interest rates from inflation, from cost of living and so on. And they all have an impact down the line. And if you look at a large business that's manufacturing, that is buying parts or services from a small business, they put them under pressure to keep their costs down. The small business is facing more pressure on increasing costs, needs to put its prices up, but their big customer won't accept higher prices. So there's a win, and then that small business goes bust, and then you've got the whole knock-on effect of insolvency, which is terrible, and goes way beyond just money being lost. So it's a sort of vicious circle, really, which we have to try and manage.
Yeah, I clearly see that, because you see, one thing is, business goes bust quite quickly, but then this means that every business is a certain collection of customers, suppliers, people, many things, and you cannot restart it just like this. That's what I was very concerned about during the COVID, because you see, businesses are dying, but businesses are dying in one day, or maybe in 1 month. But then to start a business and to grow it back, it takes months, if not years. It's quite difficult. Coming back to the UK, is there? I mean, I knew for as long as I'm in international business, UK used to be quite known for quite reliable, independent court system. That's why, by the way, so many companies, especially in international trade, they try to put UK law or English law or High Court of London into the contract. Sometimes this go to not the very wise extent, but we will speak about that later. At the same time, when companies are dealing with UK companies, imagine, let's say, for example, exporting to the UK or just dealing with UK companies. Is there any specific, something specific legal provisions or understanding of the law which needs to be taken into account when doing that? Any speciality of UK law? Taken into, obviously, understanding that common law is a separate part of law which needs to be read separately. But for the outsiders from, let's say, continental Europe and other parts of the globe.
Well, I think that the UK, as you said, has a well established legal system that is recognised and is sort of efficient and well organised. And that's one of the reasons, as you say, that many businesses, put their contracts under jurisdiction of English law. I think that, and I guess this is true of any jurisdiction, but there are a couple of things. One is that the English legal system is not as efficient as it was, so the delays are much longer. So if you take someone to court for non-payment, it can take months and months before that case gets heard and before you get a conclusion. So the process, the courts have backlogs, which many years ago they wouldn't have had. And that is slowing down the process in terms of getting cases through. But I guess the one principle is preparation. So, if you're going to bring a case under English law, then you have to make sure that you're well prepared and you have the right documents in place and all the right protocols are covered. For example, I was talking to a lawyer a little while ago who said that 38% of the debt recovery cases passed to him for legal action were in the wrong company name and therefore couldn't proceed. So you have to have the right names, you have to have the right addresses, you have to have the right parties, and so on. So getting the preparation right is really important, which goes back to the early stages of credit management, of getting the right information when you first start trading and so on. So that's really important. And recognizing the costs involved. So, taking legal action anywhere is not cheap. So, there are all too many cases of businesses that will sue somebody and spend, huge amounts of money doing that when actually they're going to get much less back, and they'd have been far better off just accepting that it was a lost debt.
Since you mentioned that, because I was about to ask that question. You see, I mean, let me ask about details. There is in UK, it's not similar in every company, in every jurisdiction, but in UK there is strict division of legal specialists for barristers and solicitors. And to go to court, you need to hire a barrister, which is mean court advocate.
Yeah. So I'm not a legal expert. My son's a lawyer, so I should have him alongside me. But yes, in certain courts, once you get above a certain level, you have to have a barrister to represent you. You can't use a system.
And as you mentioned, obviously, legal system is costly. Delay is clear, and and again, I'm not trying to torture you with the legal questions, but again, practical. I always advise my customer and every credit practitioner in every country on the globe. First thing, if you need to know how to go or how to, let's say, how to sue a customer, you need a local lawyer. That's first question number one. Whatever I say, Philip says, another, we don't have lawyer title. We don't have that cap. We don't have that license. That's first question. And second is actually we need to take into account the cost. And I found that, let's say, average barrister in the UK has a price per hour, which is quite common, about £200 per hour. And obviously this means certain amount of money which to be paid in order to get that court judgment. Do you have any estimate? Why I'm asking about the estimate? So when we got, because you might have experience with with debt collection through the court, obviously with involvement of that. Why I say estimate? Because that has an implication on the amount of debt which could be, let's say, reasonably collected through the court.
Yeah. Okay. So you're right, but of course barristers are different levels. So one might be 200, but one might be 500, depending on his seniority and so on.
Yes.
But in general, for debt recovery, you wouldn't need a barrister because there's a process. So you submit a claim, you get judgment through the court, and then you get to enforce a judgment, and that involves and you can do that online. Something called money claims online. You can take a case to court, and that wouldn't involve a solicitor at all, and that would be fine. The issue comes when a debt is contested, and the claimant says, "No, hang on, I don't owe you that. The goods were faulty, or you didn't do it on time, or whatever." And at that point, then you do get solicitors involved. You do get involved before a judge. You do potentially have to get barristers involved and so on, and that becomes incredibly expensive and probably non-economical to pursue.
Yes.
But at the bottom level, if you owe me money, I can issue a claim against you. You can defend it or accept it. I can go through the court process and come out the other side with judgment, which I can then enforce to get money from you. But it's still a lengthy process. So whilst that, and there are fees at each stage, they're not massive, but you need to know what they are, because you're absolutely right. If the debt's 500 and you're going to spend 1,000 in going through the process, there's no winners here, are there? So you have to know what the costs are, and you have to know, what your debt is and what it's worth in terms of collecting. And that's you have to go into these things with your eyes open and make sure you know what you're doing.
If I understood what you said correctly, is that let's say £1,000 is just like every, let's say, reasonable minimum if you take a court action.
It depends where you're going, and it depends what the fees are. And off the top of my head, I don't know what the current fee scales are, but I think I use 1,000 as an example, but I think you need to look at what the fees are at each stage, and they're all clearly tabulated on double websites. Find out what the fees are, and then look at that as a proportion of what you're hoping to recover. And I guess the one really important principle is making sure that the person you're trying to get money from has money. Because if you take them to court and they're insolvent anyway, you're never going to get any money. You're going to spend a load and get nothing back. And that's a really important first principle.
I got my 5 principles, and that was always the last, what is the perspective? And also, again, you rightly mentioned, it's quite interesting when people go to the court. Obviously, court system could be efficient or inefficient, but there is a huge difference, as you mentioned, between the case where the debt is like unconditional obligation to pay, or the debt is contested when person is disagreed. Because I'm surprised, that's why actually we do all this job promoting credit management, because so simple, obvious things like collection of debt, when it is disputed, it's nearly impossible because people don't believe you fulfilled your contractual obligation. How can you ask them to pay? Will you, I mean, I always say when I'm delivering my trainings, I say, will you pay yourself in this situation? No, you won't pay. So how can you expect others to pay? Philip, thank you very much.
And this,
Yes.
Andrew, this goes back to our very start point, doesn't it, about people? Because if you've got a good relationship with your customer, then when that situation arises, you would hope you could sit down and talk to them and have a
Yes.
reasonable conversation and come to some sort of compromise. If you can't, if you can't both agree, then let's agree that it would be fair to settle on this basis. And if you've got a good relationship, you've got a much better chance of doing that than if you've got no relationship.
Since you mentioned that, this is great to mention. And by the way, that's actually one of the reasons I do this, international journey about credit management. I found, because my career started in Ukraine, and in Ukraine, we had like empirical evidence that when two companies go to court, there is no relationship anymore. Then it was surprisingly, I was working already here in Switzerland, and just after that, I was speaking with my co-author of Happy Customers, Faster Cash, and we discussed with Marcel, and he said, "Look, in Netherlands, it's the same." So may I ask you, maybe you've heard, or maybe you've seen yourself a case where somebody, one company or one business sued another one, and then they remain friends afterwards, or remain in relationship. To me, going to court means that, all the possible capacities to resolve the situation in a diplomatic manner is actually gone. But
I think, as a principle, you're absolutely right. I'm trying to think. I've been in situations where people have fallen out, and we've got to a conclusion, and they've come out of it happy, and they've remained friends. But once you get to court, then the gloves are off, and it becomes a sort of standoff.
Yes.
And it's very hard to maintain a relationship after that.
Oh, actually, when you go, that's what I say. So it's not like, Ukraine specific or UK specific or, any other. When you go to court, this means that relationships are gone. So forget it. And actually, this is the step, because what I'm trying to say is, when you go to court, when you sue somebody through the court, this is irrevocable. You cannot undo that and then say, okay, let's have relationship and I will draw my no. This means that the situation is already so. It is better to think twice or triple or 7 times before you really go to the court, because there will be no way back.
Yeah, I think that's largely true. Yeah, I'm sure there are exceptions, but I can't think of any. So.
That's why I'm asking. Maybe you've seen that exception once. One person in my whole credit management life, it's getting close to 30 years. Once I was said that there was a case where this happened, but this is what we can say, an exception confirming the rule.
Yeah, no, I don't think I can think of an example where it's happened, if I'm honest.
Yeah, and when we get to if we get back to the, let's say, to the traditions of doing credit management, and when we speak about the terms of credit, normally it is largely defined by the local customs, local traditions, and actually market traditions of the specific market. If you can just a little bit outline what are the usual credit terms in the United Kingdom. Depends on the industry, but just give us a couple of examples, maybe.
Yeah, so I mean, they do vary by industry and so on, but the most common terms would be net monthly, so end of the month following month of invoice. Government is putting a lot of pressure on people to pay in 30 days. and government believes that's 30 days from receipt of invoice. But even so, there are many businesses that call 30 days, that call it monthly 30 days, even though they talk about 30 days. And I think that, across the board, if you take out all the sectoral nuances, and the ways in which businesses and sectors have built up a way of working, which includes longer terms for slow manufacturing processes, for example. The most common terms you'd come across would be 30 days or net monthly, or and exceptions of 60 days. But increasingly, we're seeing terms of 14 days for small businesses, where large businesses are trying to support their small suppliers, and 45 days is becoming more common again as a sort of compromise between 30 and 60.
When you say 45 days, this means 45 days from the end of the month.
No, generally 45 would be days from receipt of invoice.
From invoice date or from the shipment date. So you normally, as a matter of tradition, you've got something like Declan Flu advised us that certain date after the month. There are businesses where this is more than justifiable. This is a common tradition. A good example, mobile communication. Yeah, you are consuming the mobile communication over the month and then pay after the month end. So in the situations where there are small deliveries and things like that, and then big number of small deliveries, and then you pay in the end of the month, this is clear. Where there is a delivery of certain load of goods, and there are 3-4 of them, obviously it is much more suitable to use 30 or certain number of calendar days after the delivery, which is much more clear and much more so. And as you can see, as you said, that currently in UK you are using both depending on the industry. So, and may I just take you back to that historical perspective of 2008, and because we are speaking about the credit terms, and I understood that government intervention into the length of credit terms, what I observed started in 2008 when and to me, this happened because big retail chains started to abuse their bargain capacity. And therefore, businesses in the countries, mainly in the European Union and UK, used to be part of the European Union at that time, actually had to interrupt and to set sort of protection from that abuse of bargain power. Is that because you are closer to the legislators? Did that happen more or less this way, or was it any other reason for that?
Okay, so I think government intervention was before that. So I'm trying to think what year the Late Payment of Commercial Debts Interest Act was. I think it was 1997, but I need to check. But that was the first. But that was the first government intervention where government said that if you don't pay on time, then interest can be charged a percentage above base rate for late payment. And that was an attempt to get businesses to, particularly big businesses, to pay their small suppliers on time, and so on. And then I think 2008 was the credit crunch, and that was the sort of the moment when government wanted to try and make sure that small businesses survived, and there was a belief that large businesses were exploiting their small suppliers, and supermarkets were one example of that. Where supermarkets were taking delivery of broccoli, they were selling it within 2 days and getting cash from the customers into their hands, and they weren't paying the farmer for another 30 or 60 days. And clearly there's an imbalance there that was trying to be addressed. And so there have been a number of iterations of the legislation, which have coincided with the EU legislation around late payments and so on, which is still ongoing. And it was in 2008 that the government at that point recognised they needed to get cash flowing into the accounts of small businesses, and the business minister then asked my organisation to launch a prompt payment code to try and drive good behaviour and prompt payment and so on, which was all an attempt to get cash flowing more quickly into the hands of the smaller businesses. And the prompt payment code has gone through a number of evolutionary changes over the years, and they're going through another one now. And legislation has gone through a number of changes as well. So we've got to a point where government is intervening more and more rigorously than it used to. But 2008 was a watershed moment, because that was when the credit crunch hit and government realised it really needed to do something.
And yes, so as we are gradually coming to the payment situation and payment behavior in the country, and this is my I'm obliged to ask you, how do you see the current payment situation in the UK? How do you see it? Whether or not it is improving? And as you know, with the link to the previous question, I was always interested to see, because I haven't found any let's say workable control from government side. So government prescribes that, for instance, in the European Union, that credit terms should not be longer than 60 days. But then it's a question that it is only for the local trade. It doesn't have any application for import-export, where it could be longer. And when we speak about, like here in Switzerland, we've got suppliers from everywhere. That's one part of the story. But then, if the contractual payment term is set 60 days, then how it is controlled. And we both know that payment term is actually finger point in the moon. And the moon is actually date of actual payment. The actual payment may come in 6 months, and then so what? Where's the cash flow? So if you can address these two questions simultaneously, I believe they are linked, or we can separate them if you need.
Yeah, I mean, I think it's been an interesting journey. I've been involved in this since I don't know when. Late payment has been a perennial problem, and that's why legislation was brought in 1997. It's why there have been all the iterations since. It's why the UK government is currently looking at it more closely. The issue for me is that businesses work with each other, and in general terms, that should be a partnership relationship. And we've moved away from the point where payment terms were a sales tool, and that's what they were when I was growing up in credit. We would offer our customers 60 or 90 days payment terms in order to win more business, and so we would willingly do that if they'd guarantee to give us more of their purchase orders. Now, under legislation and under government guidance and requirements, you can't do that. And to a certain extent, that is restricting freedom to trade. And I think that's a shame. But the problem is that simultaneously with that, businesses are exploiting it. And so large companies are demanding longer payment terms, which small businesses can't sustain, but feel unable to refuse. And so they end up in a position where they're giving much longer credit terms than they're receiving. And that means that they run out of cash and go bust and so on. And I think government often overlooks the complexity of all of this stuff, and they don't see some of the practical realities. You were talking earlier about net monthly against 30 days. I grew up, my credit career started in an electrical wholesaler, and most of our customers would have invoices every day. They would have 20, 30, 50, 1,000 invoices on their monthly statement, and they would then be required to pay within 30 days of the month end when we sent them the statement with all the invoices on. Now, if you follow the logic that says they have to pay 30 days after receipt of invoice, they would have to make a payment every single day, and that's unsustainable in practical terms. It's possible, particularly with movement in open banking and payment systems and so on, but it surely isn't that desirable and doesn't make a lot of sense. But we've moved to a point where that almost has to happen in order to meet government guidance. And government is trying to protect smaller businesses by decreeing. So they've just they're passing the Procurement Act in the UK. It's now gone through and been enacted, and that says that for contracts with the public sector, payment must be in 30 days. There's no deviation from that, and it must be followed. And businesses trying to win a public sector contract of more than £5 million cannot impose terms of more than 30 days on any of the subcontractors or suppliers. And I think that is in some ways commendable and good, and in other ways damaging to what was a vibrant free economy. But the reality is that small businesses fail when they run out. Well, all businesses fail when they run out of cash. So if you can't keep the cash flowing, then they will go out of business, and that's what government is trying to do. And I spent a lot of the time when I was small business commissioner through COVID talking to large businesses about how they behaved towards their small suppliers. And we've seen a lot of large businesses get much, much better at paying their suppliers. And many of them now will pay their small suppliers in 14 days, but the rest of their supply chain in 30 or 60. They have a process to make sure their small suppliers get paid quickly, and that's got to be good. I'm a director of a campaigning organisation called Good Business Pays, which is driving prompt behaviour, and we publish details of many businesses that are really excelling at how they treat their suppliers. So I think we're seeing many improvements, but there are still some businesses that don't behave well, and this is around cultural change and businesses wanting to do the right thing.
Well, so as I can feel from your words that paying on time for the bigger businesses has become a sort of social responsibility. Like we are supporting smaller businesses because we understand. You see, I'm following your publications with regards to that, Good Business Pays and others, but I always got a bit mixed feeling about that. So let me share one with you, and maybe let's have the last and in the conclusion of our today's discussion. You see, on one side, I do believe that government initiative and initiative of your activity really help smaller businesses to survive. Obviously, prevention of abuse, let me call it exploitation of that longer terms, exploitation of bargain capacity is really important. But at the same time, I speak with the smaller businesses and even medium-sized and sometimes even bigger-sized companies. They really fail to apply credit management practices because let me justify myself a little bit. What I'm trying to say is that we both know that getting paid on time presumes a huge amount of work by the creditor or by the supplier. Establishment of payment term, thinking whether or not this or that specific credit term is really affordable for the company, like in terms of gross margin, in terms of financing capacity, many other things. We're not doing credit management workshop here. Also credit risk. But do you, and also with what you just said, that the freedom of contract is somehow touched. But do you think that there is still, on top of the great job you do, on top of the great job the UK government does, that prevention of late payments, do you feel that there is still a way to go and job to be done by small and medium-sized enterprises themselves in order to protect themselves?
Yeah. So I spend a lot of time talking to small businesses about how they can get paid. I've got a 5-step model which looks at how they can avoid not being paid and getting late payment. And it starts, way back. We talked about this earlier on when we talked about the legal system. If you don't know who you're supplying, how can you invoice them? If you don't know where the invoices have to go, how can you send the invoice? All of those things. And small businesses, get that fundamentally wrong. And I've talked to loads of small businesses, who don't even ask when they're going to be paid. Someone says, I want 50 of these next Wednesday, and they say fine, and they ship them. And then they think, oh, well, where do I invoice? When am I going to be paid? And they make assumptions. Well, they'll pay me on 30 days, won't they? Well, why will they if you've not got an agreement in place? And small businesses, the problem is that if a small business is a web designer or a hairdresser or a plumber, they've gone into business to do what they enjoy doing, and that's what they love. They haven't gone in business to raise invoices and chase payment and all of those things, and they have no knowledge of that. And it's only when they don't get paid they start thinking, oh, maybe I should have some knowledge. And I've done stacks of webinars for micro businesses about how to avoid not getting paid. And they you talk to them and they say, I never thought of that. It never occurred to me. I just assumed someone would pay me. Well, assuming anything is dangerous. And I think that, and one of the challenges is that government can bang on about, we insist businesses pay in 30 days. That's great. But if the invoice doesn't get to the right place, they can't pay it at all, let alone in 30 days.
Yeah.
If it's made out in the wrong name, the business can't process it. If it hasn't got the right details on it or the right price, they won't pay it. So it goes all the way back to the beginning. And the problem is that government and policymakers make an assumption that all these things will happen right, the invoice will arrive, and then it should be paid on time. Well, that's great, but they forget all the circumstances where it doesn't arrive right and therefore can't be paid on time. And I think that's, and I've talked to small businesses when I'm a small business commissioner, and they would say, this business isn't paying me, what can you do to help? And we talk to the big business and they say, we haven't even got the invoice, or the invoice isn't right, we've asked for it to be reissued or something. And once we fix that, then they get paid. And there's no intent on the big business to avoid paying. But if you're a business that's, that's processing 10,000 invoices a month, anything that's wrong isn't going to get into the system. And that's why we need to encourage e-invoicing, because that helps with accuracy and all of those things. And all of these things feed into it. And anybody that thinks that government can wave a magic wand and fix the problem of late payment is deluded, because it's much more complex than that. It's cultural, it's process, it's practical approaches to how you trade and how you behave and what you do. And that's the bit where small businesses fall down. And then large businesses are often inefficient, so they're not good at handling invoices that don't fit. So they sort of stick them in a tray and wait to deal with them, and then they don't. And so all of these things contribute to what is seen to be a behavioural problem but it isn't always behavioral. It's often around process.
Yeah, it's once I spoken with the marketing person. We were discussing what is credit manager, and he gave me a great definition what is accounts receivable and what is credit management. So he had greatly poetic definition. So if I translate that into English, accounts receivable, it's your money which are laying down in the pockets of your customer. So, but in the end of the day, that's I think this our today's discussion is a great message to all the small businesses that this is your money. Take care of it.
Absolutely.
You should
Yeah.
take care of them. And this is, you see, I've seen many examples, and as I grew up and my career started in Ukraine, I thought that, in Europe, there are no issues like that. But the problem is it happens everywhere. This really happens everywhere. We send invoice, we believe it arrived, but we never knew. I mean, we never checked it arrived.
Yeah.
And it starts like the same story you said with 39% of claims with the wrong name of the debtor. Well, it's quite impressive, but not in positive way, unfortunately, because what I found is, in general, credit management is a lot about details.
Yeah.
And you don't need to spend 30 years in the profession to protect your receivables. It's only like reasonable things which are just required to be done. Not too much. It's not too much of work. And on the other side, I do believe with the growth of that fractional credit management, with with all the tools available in the market, with every small business and medium business who wants to take care of their receivables, they can just invite those who can, and it doesn't take all money in the world to do that. And last, maybe quite poetic or maybe reasonable statement to say, if you agree with that, is that what I found is that credit as an event, as an economic event, takes its price from the creditor regardless willingness to pay. Just to motivate companies, just to say, oh, you might not spend your money on credit management. That's your choice. But then don't be surprised you write off debts and pay banks and looking for liquidity and pay banks for interest to compensate late payments from your customers, and so on and so forth. If you can add something to that, if you agree with this idea.
I do agree with that. And I also think that the credit professionals often add more value at the front end than they do at the back end. If they've done the front end right, collecting at the back end should be relatively easy. You either get paid or you don't. And if you don't get paid, you make a decision on whether you sue or you don't, or what action you take.
Yeah.
But if you haven't done the front end right, then at the back end, you've got all these, is it the right company? Is it the right details? Is it the right purchase order? All of those things that we've been talking about. And I think we often forget that, credit is a sales tool. Why did anyone ever think it would be a good idea to give you something today and ask you to pay me in 30 days? I mean, that makes no sense. A supermarket would never do that when I went and bought cornflakes. So why would two businesses do it? They do it because they need to do that in order to, in the manufacturing world, allow things to be made and sold and money to catch up. And in a non-manufacturing sense, just to win business, because people manage their cash flow on that basis. And credit only exists to help make sales. And you started this conversation talking about the thing that my sales director said, and I was the best salesman he never had. And in that company, I spent almost all of my time finding ways to do business that, as a credit professional, I really didn't want to do. but the company needed those sales, and we had to find ways to make them happen, and to engineer them. And that for me is what credit's about. It's finding outlets for the product. It's finding customers that are credit worthy to take more product and so on. And it's doing all the front end things to make it right. And if all of that happens, then your back end process is much easier.
You see, I mention in that every time because I'm a little bit, as we say, white curiosity. We say that in Russian. It's like, positive side, because actually that your interview of yours in Credit Management Journal in the beginning of, I think it was 2001 or 2002. I've read that, and that actually inspired me, or gave me an idea to start establishing, good working relationship with sales. And now I can prove with my own experience that, I started that from the scratch, from really a fight to the positive relationship. I mean, my sales director, when I was leaving the company, was not as pathetic as your colleague, but it was really, I mean, I really had great relationship with the sales director. To give you an example, I was receiving a call from him, from sales director, each time he was taking any serious decision touching receivables. He was simply, can you please come? Can we discuss? I mean, that was really appreciated. I understood that, okay, this is, I would say, 50% of the success. But coming back to the job on the front end, as you mentioned that, what I found is quite interesting is that in the beginning, I said that so many businesses really believe that every job, every debt is possible to collect, which is very far from being true. And at the same time, I can only conclude that collection of debt, or the final payment, let's call it collection, is only as successful as the job done before that. Because
Absolutely.
if you do whatever you wanted, if you did whatever you wanted, payment terms, everything, and then you believe that then I don't know, Merlin will come on his boat and settle all the issues down immediately with his stick. No, this would never happen. There are no magicians.
No.
No collectors, neither collectors, no lawyers, no credit managers or whoever can. There are irreparable mistakes.
Sure. I mean, if you've got a contract with somebody and they've been tiling a wall and the tiles fall off the wall, you can be the best credit professional in the world, but they ain't going to pay you if the tiles are sitting in a pile on the floor when they should be stuck to the wall. So it's a. I remember mediating with a big national contractor, and it was a really interesting case because the main contractor wouldn't pay the tiler because the tiles had fallen off the wall. But the reason the tiles fell off the wall was because there was a problem with the plumbing, which had caused a leak onto the back of the wall, which meant the tiles didn't stick. So we had this sort of three-way debate where the main contractor said, well, we can't pay because the walls aren't tiled. And the tiler said, well, you should pay me because I put the tiles up. And the plumber comes in and says, well, no, but and it's and in that scenario, it doesn't matter what you do, you're not going to get paid, are you? You've got to find a way. And I think the other sort of fallacy is that it's credit people that always collect the cash. Well, it shouldn't be, because cash collection should be a company-wide issue. And very often the best contact with the customer is the salesman. Yes. And if the salesman has a good relationship, then he's the best person to push for money. And I might have told you this before, Andre, but back in the credit crunch, 2008, 2009, I had a colleague who was a sort of class shop fitter, did shop fitting all over the place. And he said to me that at the beginning of the recession, they knew they were going to have some customers go bust on them. What they didn't know was which ones. And so they had to find a way of making sure they got paid as quickly as possible. And every Monday morning, they had a directors meeting and they sat down with a list of anyone that hadn't paid and said, who knows this customer the best? You go and talk to them. And sometimes it was the engineering director, sometimes it was the sales director, sometimes it was the credit guy, but whoever knew them best went and talked to them. And several times he said to me, we had the conversation, we got some money, and then they went bust. And if we hadn't done that, we'd have been included in the insolvency, but we got some money out first because we went to our best contacts. And that's a really good example for me of where the business has to pull together, and collections, as you describe it, is a company responsibility. It's not, it's no good the Salesforce sitting saying, well, you haven't collected it, so that's your problem. In the same way as it's no good me sitting there saying, well, your tiles have fallen off the wall, that's your problem. We've all got to, we are a business, and we've got to work together.
Yeah, we are floating in the same boat. There is it's not like only yours boat or my boat. And I can confirm with my career is that when people say like salespeople could not collect, I can confirm that they are the best collectors in the world. I mean, we will not go deep into details, but I was working with the sales team, and I used to collect just because we had sort of not really a policy, but the tradition that wholesale customer must have one account manager who solves all the issues for them. Therefore, collection is one of the issues, and they can do that. But what I would like to draw our audience's attention to is that at the same time, credit management is much more than collection. It's mostly about the job done before it, and from the very beginning when we offer competitive terms to to customers. And by the way, this is actually the best time to make sure we are paid on time.
Yeah.
If we really take care, if the business is, you don't need to be, again, it's not like, well, it's rocket science and very far from being rocket science, depending on the case. But at the same time, the best moment to make sure you are paid on time or your business is paid on time is when you are aligning payment terms.
Yep.
When you are aligning terms of credit with the customer. You must make sure that it is competitive on one side, that it must be feasible for customer to pay at the other. So when you do that at the right time, there might be really no need to collect at all. Philip, I do thank you very much for this great discussion. I personally had a great pleasure, as always, speaking with you. Thank you very much for sharing and representing that interesting, and to me, that's still alma mater of credit management, at least in Europe and maybe in the world. I mean, I don't want to dispute that, but for me, I learned, and I had a pleasure to learn credit management in the UK, which I'm proud of. Ladies and gentlemen, today we had a great Philip King, who shared with us your experience and knowledge. If you still have questions, please don't hesitate to put them in comments. I will direct if Philip will miss them. And as usual, I will try my horrible French to say that I wish you, everyone, highest possible sales, lowest possible losses, or as it could be said in French, bon crédit. Speak soon, and thank you very much, Philip.
Thank you so much, Andre. Always good to chat to you. I enjoy it so much.
Bye-bye.
Thank you. Bye-bye.